The Moving Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours.
When you partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast. Marks with Shawn Hackett. Shawn Hackett is with Hackett Financial out of Boca Raton, Florida. He's nice enough to come on and talk about what's happening in the world of commodities. Shawn, how you doing this morning, man?
I'm doing good, Casey. Always good to be on your show as always. So
It's always good to have you on my show, Shawn. Without you, I wouldn't have one, so I appreciate you coming on, buddy.
yeah.
Lots of stuff moving right now. So we've seen wheat hit $7 last night at the close, down a little bit this morning, probably do some profit taking and those kind of things. Corn, December corn's flirting with the $5 mark. It's kind of bouncing back around here. Last couple of days, it's kind of banging around that 494, 496, kind of bouncing back and forth in there. A lot of new weather information came out of Russia about the situation they've had. They've had two hard frosts come through now last week. So now they're looking at some stuff. I read an article in here this morning talking about how they had lost close to 500,000 hectares this year due to bad weather. So we see some issues there. I guess, Shawn, as you're looking at weather playing into what we see going on with the crop situation and then just the overall condition of the crop, we're seeing some delays here in the U.S. When you look at some rain in the Iowa, Illinois area, not crazy rains, but just enough to keep guys out of the field. As you're looking at those situations, Shawn, where are we at in the market right now?
It seems to me, the two areas in the U.S. that are bothering me is the incredible rain we're getting in the South, the deep South, the Southeast. I mean, we're talking about potential for a foot of rain over the next week. They've already had a ton of rain. Um, so, everything that they're planting down there, like cotton, for example, specifically, is particularly impacted by this. I just think there's big trouble down there in that area. I mean, you're not going to eat whatever you got planted isn't going to do too well with a foot of rain and underwater and that sort of thing. And then if you look over, like, let's say West Texas, West Kansas, West Nebraska, very, very dry. So, we talked about this in our report to our subscribers a few weeks back about we've had this, what we call this bifurcated flood drought in different and adjacent areas in the world. So we just talked about the U.S. flood drought in Brazil, historic floods in Rio Grande do Sul, ruining soybean and rice crops. Historic drought to the north, ruining the second crop corn. We have historic flooding in southern China, destroying the rice crop, the sugar crop. Yet we have a significant drought to the north, kind of threatening soybeans and corn production up that way. We have historic drought or a severe drought in Russia, but yet in the Middle East, they're underwater with rainfall they've never seen before. This is going on all over the world, and I think it's a function of this amplified upper airflow pattern that we've been talking about in relation to the quieting of the sun and also to the relation of the peak in sea surface temperatures, meaning that when the Gleisberg cycle comes to an end, the 89-year Gleisberg cycle comes to an end, you tend to reach a peak in the heat content of the oceans. And when you have the heat content of the oceans that hot in particular regions, you tend to create extreme high pressure systems. And where there's an extreme high pressure system, the atmosphere balances it with an extreme low pressure system. Hence why you're getting these bifurcated drought floods fairly adjacent to each other, creating equal and opposite extremes, causing crop problems on both sides of the equation. On top of it, you had a 2-day frost in core Russia wheat areas that broke record cold temperatures. So this is the weather volatility we've been talking about for a long time. It's going to continue to be a problem, and the genetics can handle extreme weather to a certain extent, but it can't handle this kind of extremes and flip-flopping. So as an example of a flip-flop, we had 105-degree temperatures in Southeast Asia, destroying the coffee flowering season there. Record heat of all time, the drought most severe of all time, wells running dry, and now they're underwater. Just like that, underwater. That's what I'm talking about. We're in a very amplified, volatile pattern, and it means we're not, when it's all said and done, when we get to September and we look backward at how Northern Hemisphere crop production is turning out, it's not going to turn out well. It's going to be below, well below what everyone's expecting. And it could be a combination of drought and flood, both combining to create even a worse crop problem. So right now in the U.S., we have a very wet spring, which is not unusual. El Nino is still with us. It's leaving, but El Nino means wet spring. But it's likely to lead into a hot, drier, at least in our view, the mid part of the growing season. And that's your flip. And if we get those 100-degree temperatures that we've been lacking since 2012, we've seen years where we have a wet spring and then a very, very hot, dry July, and the crops don't turn out well at all. You actually get the crusting over of the soils, and it creates all kinds of issues. So bottom line is, that's the way the weather pattern is playing out. And once you establish that trend in late spring, that's kind of the trend that you're going to have for the rest of the growing season. And the trick is, when does the rain turn on? When does it turn off? And that's obviously what we do with our climate cycle algorithm to try to figure out, where are the risk points now, or where are they going to change, and which crops are at greatest risk for impairment. Obviously, right now it's the wheat market getting the brunt of the issues, especially in Ukraine, Russia. Everybody keeps talking about Russia, but Ukraine has been exceptionally dry. And for better or for worse, I mean, they've been able to ship a lot of grain out, And I'm still amazed that they're able to do that. But the bottom line is, their corn crop and wheat crop are not going to be good. So even if they continue to be able to ship the crop out, it's going to be a much smaller crop anyway, and that on the margin is another bullish development for overall supply and demand. So,
Yep. All right, so let's talk a little bit about, you brought up wheat. I brought up wheat too, I guess, so can't point my finger just at you. But when you're looking at the wheat crop and the things that are going on there, we've got the first day of the Kansas Wheat Tour starts today. That's going to tell a lot of, boots on the ground type of perspective what's going on there. The USDA is still rating 50% of the Kansas wheat crop good to excellent. Not too long ago, a third of it was poor to extremely poor or very poor, however that goes. So, looking at that, those kind of things that come out, do you feel like the market's got some of this Kansas Wheat Tour thing kind of baked in already, that, hey, we got enough stuff that's already there that we kind of see that this is going to be a worse off crop than we think? Or do you think there's going to be some surprises that come out, that if the Wheat Tour does come back and say, hey, this stuff is, it is, 45%, 50% poor to a very poor type of thing, and it flips that script, do you think that's going to have a huge upward movement in the wheat market? Or do you feel like that's already baked in?
Well, the problem is we've already had a huge rally in the marketplace. We've put on over $1 in the market already. Now, does that mean it's all? Did we price in that, or is this all Russia? It's always hard to know how much of what do we have priced in. But it's not like we're sitting here at mid fives and there's no premium. Man, we've had a rally. Obviously, if the wheat quality board comes out and says the crop looks way worse than the USDA, I think we'll get a reaction. The problem with a crop, I'm speaking specifically of Kansas. The problem with the West looks horrible, the East looks really good. It's hard to know, right? With how good is good, how bad is bad. Typically, these crop tours, not every time, but more often than not, will say things are a little better than people think they are, and then people yell and scream that they're wrong, and then they had too many beers at the bar before they did the crop tour and that sort of thing. If I look at the entire crop, not just, let's remove Kansas, let's look at the entire, winter wheat and hard red winter wheat crop, I think it's going to be okay. I don't think it's going to be as good as we thought it was going to be, but I think the market knows it's not going to be as good as we thought it was going to be, and I think that is priced in, but I don't think it's catastrophic. I think it's going to be okay, and I think that's what the wheat board's going to say, and I don't think that necessarily is bearish. I just don't think it's going to allow for the market to take out $7 resistance. In order for it to take out $7 resistance, they would have to say it's much worse than we currently believe, and or the drought in Russia needs to extend into June, which it may. The pattern there looks pretty entrenched. There's some, the models are all over the place as always, but there's some debate as to whether rains will come or not. But if the wheat, if the Russia drought were to persist into June, I think that could take wheat prices over 7. If the wheat board says, hey, no way the USDA is right on this, that could take it over 7. I don't think we're going to get that from the crop tour. I think if we're going to get a move over 7 right now, it's that the weather models just are start to really push a drier narrative for Russia. That certainly would do it. But I think for right now, looking at $7 resistance without Russia drought extending into June, harvest is about ready to fire up here in June, and usually that means harvest pressure. The weather market ends. There's some, selling that comes in. I'd be a little worried about some kind of a pause. Doesn't mean we're at the highs for the year, but I do think that, if you're a producer that was being scared into trying to sell $5.50 wheat, a few months back, and you just put on $1.20 on the marketplace, this is an opportunity to get some cash sales on the books, a profitable price, by the way, and I think that's what I would be doing if I'm a producer, is locking in these prices on some percentage of your production. It just makes too much sense to me to do that versus where we were just a month and a half ago.
Right on. All right, man. Let's jump down and talk a little bit about what you see happening in the hog market here. So we're seeing cutouts are back up above $100 per hundredweight. So pork cutout value firmed up $2.67 on Monday to 102.44. Is that a seasonal move, or do you see some light, more sustainable light at the end of the tunnel here than for the hog market?
I mean, overall, generally speaking, cattle and hogs, I remain ambivalent, meaning I don't think they're bullish and I don't think they're bearish. I think they're stuck in a wide-ranging trading range. If you look at the price of cattle and you look at the price of hogs, they've been kind of going back and forth, back, albeit at a higher level, by the way, a level that's better than they were. But I don't really think where I think we are with the consumer confidence in the consumer economy. I just don't think we're at a place where the market's going to be chasing cash prices too far. But I do think they're going to look for value when the cash prices come back down. I think there's sufficient supply of cattle and hogs to handle the grilling season demand that's out there for this year. So I think some of what you've talked about is more of a seasonal thing. My view is, if you're a buyer of hogs, if you're a physical buyer, you just buy the bottom end of the trading range. If you're a physical seller, sell the upper end of the trading range. And I feel the same way in cattle. That's been since really, if you look back, since the fall. I mean, that has been your ticket to bringing more money home on the farm, is selling the upper end of the range, selling the lower range. I do think both markets can break out to the upside later on in the year. Technically, fundamentally, I think China comes on board with demand later in the year. I think we can break out to the upside, but I just don't see that happening through spring. I think through spring, maybe watching, a bird dry his wings might be more exciting. So.
Okay. All right. I've not heard that analogy before, Sean.
I haven't either. I was struggling for one, and I just pulled one out. And
it's a good one.
It's probably the worst one I could have picked.
Right on. Okay. So we'll jump over this one more time. You did see at the last on Thursday when the report came out that the USDA did bring down the Brazilian crop a little bit, not nearly to the level that Brazil has brought their crop rating down to. But you're starting to see Argentina's soybean crop estimates. They're starting to cut those a little bit too as we move through this. They're seeing some disappointing yields so far in the north and the far south production areas. The potential for frost impact on some later developing beans. So you're starting to see that move into play. As you take a look at where the USDA is now, do you ever see them coming in line with what Argentina and Brazil have for their crop estimates?
I mean, they almost never do come in line, meaning that they never, not just in corn. I mean, they don't agree with coffee. They don't agree with a lot of crops. The methodologies are different. I'm not saying one's better than the other, but they rarely come exactly together. But I do believe that Conab Brazil is closer to the truth. And I do believe that the USDA is starting to move in the direction of narrowing that gap. And I think they're going to continue to narrow that gap, Casey, in the next report, meaning move closer to where Conab is, although I don't expect them to move all the way down there. And they don't need to move all the way down there. They just need to narrow the gap enough where the market can say, okay, these crops are off. They're not going to be as big as we thought. Exports are going to be down in Brazil. They're going to be up in the U.S. We need to move ending stocks down, and such forth and so on. And I do believe that we finally did see them, at least on corn, start to move more aggressively in the right direction, as they should. One thing to remember, which I don't believe they did consider in this last USDA report, I don't think they considered the fact that 30% of Rio Grande do Sul is underwater and that crop is gone. They'll have to address that in the next report in June and knock soybean production down. If they don't want to knock it down from the drought that we had, and they don't seem like they want to, they're going to have to move it down on that. I mean, that is a real, absolutely tangible, for sure, loss of additional production that they did not factor in this report, that they will have to factor in to the next report. So I think a big move down in soybeans is coming in the June report that will move the bar, closer to that mid 140s level, which is really where we've been all along, and that is a substantial reduction from what soybean production was last year. Look, everyone was predicting this historic record-setting yield in Argentina that they have never before been able to achieve when they had perfect weather before. I don't know why anyone thought they were going to be able to pull this off this year. I mean, there's nothing to suggest why they would be able to do that. So essentially what we're doing is we're taking over-bloated yields that never should have been put out there in the first place, and we're moving them down. I don't think they, when I looked at the yields, the best case scenario, was 50 million metric tons, so why they're up there at 55, it made no sense to me, Casey. So all I think they're doing is they're moving down to where they should have been all along. And yeah, they've had some unfavorable rainfall during harvest, which has hurt. They've gotten some cold weather, some frost that have hurt. It's still a good crop, Casey. I mean, there's nothing that's going to say this is a terrible crop. It's still up substantially from their half a crop that they had last year. But like Russia, you take 5 to 7 million metric tons off each crop. Yeah, on the margin, that's not the end of the world, but it adds up. You take 5 to 7 million metric tons off of the soybean crop in Brazil. Now you're talking maybe 10 or 13 million metric tons you're taking off combined from what you thought. I mean, all of a sudden you keep adding these losses, and you go, well, things are just a lot tighter than we thought, and that's going to come into the global ending stocks that they put out in the June report. So they're finally moving in the right direction. They're slow as hell. We call them slothy slugs. That's what the USDA is. They're very slow to move. They're very resistant to move. I view Brazil government as a rabbit. They like to run fast and run quick, and sometimes they overdo it to the downside. Oftentimes, but ultimately, I do think we're starting to see compression in the production estimates, and that's a good thing for getting prices to be correct from what's actually happened down there versus where we were, in my view, before, when we were dealing with some kind of a fantasy utopian production forecast that we had a couple months back that led to the $4 corn and $11.5 soybeans and the talk that we were never going to see the market rally again. We're moving that fantasy, we're moving it back into reality, and I'm always excited when we get back to more of the truth versus the fantasy. So, and the last thing I do want to say, and I forget if we mentioned this last time, but last year's crop, I'm going to sit here and tell you 100%. There's absolutely, positively, not a chance that we had a 177 corn yield last year in the U.S. Absolutely complete balderdash. It did not happen. It has not happened. When you look around at the actual corn supplies that are lying around the country, and you look at what a 2.2 billion bushel carryout should look like at this stage of the marketing season, we do not have 2.2 billion bushel corn sitting out there. It's fantasy, complete fantasy. Now, don't get me wrong. It doesn't mean we had a horrible crop last year, but it wasn't that good, given the weather that we had. The way the USDA plays this game, they'll never admit that they screwed up the 177 yield. They're just going to make it up on the quarterly grain stocks report in June. They're going to look at, oh my gosh, we don't know what happened to 300 or 400 million bushels of corn, and we just can't find. Demand must be better than we thought, and they're going to blame it on that they misjudged demand. They'll never admit that they just totally screwed up the yields and got it completely wrong. That's how they correct these things, albeit months and months and months and months and months later. That's how they kind of correct their errors. And so I'm fully expecting that to happen at the end of June. When we get that quarterly grain stocks, I think we're going to get a big knockdown in corn, quarterly grain stocks from what is expected. And that's going to be, that's going to be another important bullish fundamental lever to pull as we might be moving into a hot, dry pattern in July if our forecast is correct. Just something that, kind of something to look out for, that if we get this correction into June, when planting gets done, we've had good rainfall, the crop's going to look good. We do this every year, Casey. I mean, this is nothing like this is rocket science that we typically correct in mid-June, and I think we will do that. But keep that in mind, because that's going to be your opportunity on the buy side. If you're a physical buyer, that's going to be a buying opportunity. Just like now we have a selling opportunity. That's going to be a buying opportunity. But these are things we think about, because you have to understand how the USDA operates. You have to know how their DNA operates, how they typically do things, and then you have to weigh that accordingly. And that's where I think we're at. So,
right on. Lastly, just real quick on last week's report on Thursday when it came out. Excuse me, on Thursday when it came out. Any big surprises there to you? Anything that stood out to you as a big shocker either way?
I didn't really. I mean, it's usually they in terms of new crop production, we kind of know what they're going to say, right? I mean, we know what the acres are going to use. We kind of know we already know what the quarterly grain stocks were that we came out, so we can kind of use that. Demand, it's the Ouija board, just play the demand game, but not going to mess around with the demand numbers too much. I didn't really see anything in the numbers that were surprising on the new crop balance sheet. I'm not surprised they moved the corn crop production down. Some people were surprised, and maybe that's why the corn market reacted the way that they did. But overall, I think the market rallied on the report, Casey, because it wasn't bearish. Like, I think everyone was prepared for a bearish report.
Yeah.
And it just wasn't bearish. I mean, I'd say it was mildly supportive. But if you're looking for a bearish and you get mildly supportive, the market just took that and a lot of short coverage took place. And we had a very good rally that day, if you recall. So,
yep. Very good rally.
Yeah. So I just think the bears are struggling to get more bearish flesh to press the market. They're just finding less and less reasons to do it. And I think they're, like I said, I think they'll get the upper hand as planting gets near the finish line. We've had good moisture. I think the crop, I don't see any hot, dry weather that's going to bother the crop in the mid-June. I think it's going to look pretty good, So I think the market's going to look at that, and I think that could be enough to provide somewhat of a reason for the market to pull back, and for the bears to maybe get a little bit of an upper hand. Typical kind of action, nothing I'm saying doesn't happen most years, but I don't think we're going to get back down to the lows. I mean, I think we're it's a correction, not moving all the way back to where we were. You know what I'm saying?
Nope, I get it. All right, Sean, good stuff as usual. If folks want to reach out to you and get more information about what you're doing over at Hackett Financial, what's the best way to do that?
Twitter page is @Faradex11, or our webpage is HackettAdvisors.com, HACKETT, advisors with an S.com. We have videos, interviews, and sometimes we put out some fundamental factors of our work to let people know how we look at things, to see if how we do things with our statistics, cycles, and correlations might be of value to those watching and listening to your show.
Right on, Sean. I appreciate you being on the podcast. Maybe I'll try to catch you again later this week. Wow, I'm all over the place.
Sounds good, Casey.
All right, man.
All right.
Casey Seymour with Moving Iron Podcast. Check me out on Facebook, Twitter, and Instagram at Moving Iron LLC. Go to LinkedIn at Moving Iron Podcast. Check out the video version of this over on the YouTube channel, which is the Moving Iron Podcast YouTube channel. And while you still can, check it out on TikTok at Moving Iron Podcast. So go there. Go to movingironllc.com for everything Moving Iron related, and check out all the information for the Moving Iron Summit coming up here November 4th through the 6th in Nashville, Tennessee. Sean will be there, and he'll be giving his rundown on what's happening there. So with that, I'm Casey Seymour with Shawn Hackett. Let's go move smart, folks. Out. Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers, and close more deals? Reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment, like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. You find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. This podcast is proudly provided by Axon, helping dealers move more iron for the past 100 years. Find out more at axontire.com. Move more iron with Axon.
Moving higher in the 21st century.